Hello traders, the title of this video is how to avoid that RSI bullish divergence trading mistakes. Let's get started. We're on a monthly chart of Zogenis Incorporation. If my pronunciation is not correct, this is the best time for you to laugh, okay? Zogenis Incorporation, EPIC ZGNX, Zulu Golf November X-ray. This is an American stock that belongs to the healthcare sector. Drug manufacturers, okay? This is about Zogenis Incorporation. And today we want to talk about how to avoid that RSI bullish divergence mistake. So this year I've been telling traders that we want to concentrate on our skills to trade, to improve our skill to trade the RSI indicator. So therefore we will be talking about the mistakes that one can make if one is trading the RSI oscillator. Okay, so here we have a trading setup. I'm on the monthly chart. And that trading setup, as you can see, the price has formed a double bottom chart pattern before. So here it is. There was a double bottom chart pattern and the price went up. But the price couldn't break above the nut. Where is the nut? This is it. This is what I call the nut. It couldn't go above the nut to complete the double bottom chart pattern. All right, in fact, or some people may say, all right, we can use this one here as the nut because it went too far. So we can use this one as a nut, draw a line there and say, okay, let's call this one the neckline. As you can see, the price couldn't go above the neckline. Okay, so now we have another scenario again. One more time, pay attention carefully, my friend. We have again, you see here, the price is forming another bottom here. You can see, can you call this double bottom? But it couldn't go back up. It's just going horizontal. This is one of the trading mistakes, a bullish divergence, RSI divergence mistake that traders are making. So I'm going to highlight what's going on here. So you can see that our RSI period 14 was going up. You can see in this session it went up. And then it pulled back a bit. All right, it pulled back a bit. Now you can see clearly that the RSI has formed itself a double bottom chart pattern right here. This is a good, a beautiful, okay, bullish divergence. So we see now that the momentum is going up, but the price is not going anywhere. So RSI, you can see forming a higher low, but also a double bottom chart pattern right here. We have a clear-cut bullish RSI bullish divergence for this stock, but the price not going anywhere so far. What's going on? So the first mistake that traders are making when they are trading the bullish, okay, bullish, okay, RSI divergence. First, the first mistake that I say to traders is the violation of the market pattern. That's it. That's what's going on here now. So we see the bullish chart pattern, a bullish RSI bullish divergence. But if we forget that the price itself, the number one indicator, is consolidating at this junction, we will get into trouble. Can you see now? There is a consolidation taking place, okay, between 11.28 and $7.77. Call it $7. Between $7 and $11, there is a consolidation. Though we have the bullish RSI bullish divergence, if one wants to buy, one should position oneself here near the lower part of the consolidation. You see, after this one down, all right, one will implement a top down trade method to buy it up. But now that the bullish divergence is in place, some RSI trader will try to buy here. It's not a good place to buy. I'm not saying that it cannot break through it, but it's not a good place to buy because the risk is high. There will be some seller trying to sell it back down because of the price structure. As I explained to traders before, the market pattern will determine the appropriate strategy that we will deploy. So, number one thing we want to check, what is the market pattern? Though we have a gorgeous, beautiful, all right, RSI bullish divergence, we cannot afford to ignore the current market pattern. So in this case, either we buy near the low here, or we can be very patient, break a bow because there are resistance here, okay, and then pull back to retest it. That will be a great setup. And then one can still buy a little bit up, or if you retest it here, we can switch to the daily chart and use the daily chart as a trading setup, and then implement a top-down trading method, daily chart, hourly time frame, 10-minute time frame. That will be a better scenario for us. But you can understand that the mistake that talking about how to avoid that RSI bullish divergence, and the mistake is that one should always pay attention to the market pattern. Though we have a bullish RSI divergence, one can not ignore the economy. I haven't finished yet, okay? In case you want to run away, don't go yet. The second mistake that is taking place here is that recently there were discussions in the United States. We know that the new president is saying that he's going to abolish, all right, the Obamacare. So there is a big issue in the United States now about the healthcare. So they want to make the healthcare sector very competitive. They want to, this will affect the revenue of healthcare company. So the sentiment now is a little bit bearish, okay, towards the healthcare sector until the new administration put a new method, a new healthcare system in place. There is a bit of uncertainty relating to the healthcare sector in the United States. So the point I'm making here is that even though we have RSI bullish divergence, one should not ignore the economy news and what is happening to the sector. All right? You remember I was talking about the trading triangle, the market first, the sector, before the individual financial instrument. So the sector, what's going on? Though we have on a monthly share bullish divergence, if the sentiment against the sector is bearish, the price is not going to go anywhere. It's just going to stagger here. The third mistake that is taking place here also is that the S&P 500, we're talking about the trading triangle now, you see. The market itself, the S&P 500 is reaching a top, it's in a triangle now. There is a bit of indecision going on. Everybody saying, is it going to continue to go up? Is it going to come down? So the market is divided at this point in time. So talking about trading first the market, at this point in time, one should be a little bit cautious, though we have a technical reason to look for an opportunity to buy this stock. So those are the few things you need to consider, before you place a bullish trade when you identify, a bullish RSI divergence. Okay? What is the current market pattern? Take into consideration the market pattern, very important. Okay? Take into consideration, the sector, all right, very, very important. It's the sentiment to the sector, bullish or not, and also take into consideration the market itself. So one may have, a perfect, bullish RSI divergence, but the price may not go anywhere or may even go down. So the reason why we need to bank that into our head is because we are not trading the technical indicator, we are taking the price. And there are some other elements, that are influencing the price action. So just try anytime you see a bullish divergence, try to go into the mind of the hedge funds. Because the hedge funds, the big financial institutions, they will say, oh, the healthcare sector, we are bearish. You see them coming on television, they say, we are bearish healthcare sector at this point in time, all right? Or they will say, we are bullish commodity at this point in time, we are bearish commodity this time. Why are they bearish? Because the fundamental or the market sentiment, are not supporting any bullish move. So if those big market players want to sell, don't try to fight them, I'm not saying that you just watch television and listen to them and follow them like that. No, I'm not saying that. We are trading the price, but there are other things affecting the price, and we want to be aware of those things before we place a trade. So, bullish divergence, RSI bullish divergence is in place. What is the current market pattern? What is the sentiment relating to the market? The S&P 500, what is the S&P 500 right now? And also, what is the sentiment relating to the sector? With those three things, combined together with our technical trading setup, Bullish RSI Divergence, we are now ready to implement a top-down trading method as a technical trader and make excellent decisions. You will see that sometimes when things align beautifully, it will just work nicely. All right. So just a short video about how to avoid that RSI bullish, divergence trading mistake. If you have any question or suggestion, well, this is your time to put in the comment section, and in due course, I will be busy recording another video to answer your specific question. We are the TSTW24 traders talking about how to avoid that RSI bullish divergence trading mistake. Happy trading to you all and speak to you soon.